Thank you for watching the S&B Forex and Futures Weekly Trade Review. My name is Mark Principato. So in today's segment, what we are going to do is explore how we can use order flow to validate retracement levels. Before we actually look at the trade itself, I want to highlight the setup area and what we were looking at the time. Also, I want to mention the trade that I'm going to show you was taken by one of our veteran traders. In fact, he's the person who developed the methodology that we teach here at S&B. The trade that I'm going to show was taken on August 5th, and this trade was taken in the euro dollar. Now, the way this was setting up, first, just to give you some highlights, is we were in basically a range-bound situation at the time. There was already initial push. There was already a push up. This vertical, or what they like to call a parabolic move, was already in place. Now that is all part of the setup. Now it retraced. It just so happens that that retracement, if you measure from this low to this high, is the 618 area. It touched it, okay? The golden mean. Now, when price reaches an area like that, that is a possible inflection point. That is a place where people may react a particular way. The crowd, and this is what we use order flow to measure. What is the crowd doing or thinking at this level? Now, the level alone is not enough. A lot of traders like to think it is, and they like to step in front of this. That's a bad idea. The level alone is actually random. What we use to take the randomness out of that level is the validation process. It can be validated in a number of ways. One of the primary ways that we like to use is something called order flow analysis. We use a particular tool that allows us to see what is happening inside this candle and allows us to determine if the trade is worth taking or not. Now, the rest of the structure helps us determine targets, and that's also very important as well. So order flow alone is not enough. It is good to validate, but that's it. Once you're in the trade, you have to have a set of expectations already in place, and that is what the rest of the structure and the patterns that we teach at S&B are all about. So let's get into the actual trade. In the actual volume analysis, okay, this is order flow right here, and it's measuring the order flow of the futures contract, not the spot market, but we can use this as a proxy. What's happening here is there's something called a net reversal right here. This indicates that there's a change in the balance of power. There's a change in the supply and demand at the moment, but that change is not going to cause an immediate effect, but there is a change. Now, as that change continues to process, we have something called a value area. The value area is defined by these two periods that created the change, or where the change came about. A value area is defined. When price goes below that value area and actually comes back up and comes through back above, that's what we call a value area recovery. Now, this value area is not to be confused with the market profile value area. This is particular to our technique of order flow analysis. When we have the value area recovery, which is what the trade is called, or what the trigger is called, we have a potential trade. When everything comes together, we have the volume analysis, we have the validation at this particular level, which happens to be a significant retracement area, the golden mean, we have enough reason to take a trade. Not only that, but the structure around us gives us predetermined targets and a stop that we know as soon as we enter the trade. We know what type of trade it should be, we know how long we should hold it for, and we know what kind of trouble we should be looking for to make adjustments. In this case, we're looking for targets around the 3270s, okay? And of course, the final target, or the most aggressive target, would be up above this previous high, up in the 33s. So that helps a lot when you have a roadmap. Now, let's see how this trade actually plays out. You can see here the value area, and this again is taking place in this area here. It's very important to understand that detail. Right here, the value area is determined and the recovery is also confirmed. Price went back inside the value area. Now, another important aspect, something else I want to mention here, is the order flow not only gives us a way to validate the trade and enter a trade with a very defined risk, but it also helps us manage the trade according to the roadmap that we've predetermined. And I'll explain that here as the trade follows through. So the entry was taken here which is indicated by the small green arrow at that low, at the bottom low, which is at that 618 level. And you can see right here that as the trade starts to go, we'll watch the order flow at the same time here, it starts to go in its favor. All right. Notice on the order flow that you have a green cluster. That is a sign of buying. It says BIT or BIT. That's buyer initiating. That's a good sign. That's part of trade management. If you're in a long position and you're seeing buyers initiating, that means they're taking out offers. That means they're aggressively buying. That really helps a lot in determining, should I hold this thing? Should I give it more of a chance? Or what should I do? Should I get out? This will help us stay in. Of course, this thing is making new highs at the moment. Let's see how it goes. Also notice where the trades, how this trade finally played out. If you look, there were two targets, just like I mentioned. The first one was taken at about, what is that, 18 pips. The second was 54 pips. What helps to determine our targets in a situation like this is the structure. Our traders know that they should take some off if there's some hesitation in the middle, or maybe just take some off just because it's in the middle. And of course, the ultimate target would be the high of the previous swing. That's ideal. So when you're having trades like this, and the market is not giving you trouble along the way, it makes the whole trading process a lot easier. You're going to be holding on to winners longer. You're going to be exiting losers faster or adjusting quicker before a trade becomes a loser. Now notice, during this entire time, the market, in terms of order flow, has been showing us what? Green clusters everywhere. Yeah, there's a couple of purple ones. Those are neutral. You can't make any judgments off of those. But the green clusters are key. Those are the signs that allow traders like us to hold, while people who don't have this information are easily shaken up by noise, get out of their trades too early, and it leads to all kinds of frustration and emotional problems. I hope you learned something about this example here. To summarize, basically this was a trade taken off of a retracement level, and what we did to validate that retracement level is we used order flow, a very particular setup in order flow, to enter that trade. And then we used our roadmap methodology to determine where our targets are. The stop, by the way, was just below the low of that entry. So the stop was about 15 pips, I think, in this case, which is not much. So taking 18, that's 1-to-1 reward to risk, and then taking 54 is like 3 times reward to risk. So I hope you gained some insight out of this trade example. What I want you to take away from this is that order flow is a key component to determining your trade entries and managing your trades. It can be done without order flow, but you need to understand at least the order flow principles so that you can sort of extract similar information from candles alone. Also remember, every Monday and Friday is a new upload on my channel, so make sure you subscribe so you can see my videos as soon as they come out. Thank you for watching. My name is Mark Principato, and I will see you next week.